What is going on, guys? It's your boy Tempo Trades. In today's video, I'm going to be showing you my A+ ICT trading model that has allowed me to get over $100,000 in payouts this year alone. So hopefully you guys enjoy the video. If you have any questions at the end, please write it down in the comments. Let's get into it. Okay, guys, so first of all, we're going to go over the framework for the model. So number one, we would ideally like this trade to happen inside the 9:30 to 11 a.m. kill zone. That's going to be the New York AM session. Number two, we want to be on the right side of premium and discount. I will explain that a little bit later. Number three, we want a major sweep of liquidity. This is the most important step. So, London, Asia, high, low, 4 hour, 1 hour, high, low, just some sweep of liquidity is going to make that trade way high probability. We want an instant reaction from the liquidity sweep. So no stalling, no consolidation, no chopping, anything like that. And we want a strong momentum close through the IFEG. Okay, so this is the framework that we are going to be using, and as long as you stick to this and you're not just taking random setups, you will have a very high win rate. The first setup was actually on gold that I want to show you. This is a little bit of an unorthodox one, but it's a great learning moment. So this is an example of bad reactions. Now, what we have here is we come up to this London high, which is a major area of liquidity like we were going over, and we sweep this level. So now we're looking for price to reverse off this level, come back down to the bottom of this range here. But again, the reactions are not instant. It takes almost 30 minutes, right? 30 minutes for price to actually inverse this candle. Now, thankfully, once price does inverse this candle, it sells off very, very nicely. But this would be an example of like a lower quality setup. And I just wanted to show you this because you're going to see the difference between this one and the other one, right? Just because it worked doesn't really matter. I would still say it's a lower probability. It is a valid setup. But again, right after the sweep, within a couple candles, you really want to start to see price reverse and inverse that gap. So it's a win. It is a short setup, but this is an example of bad momentum. Okay, guys, the very next setup, we have an example of great momentum. So this trade is going to work way more consistently than the previous one. And again, we're traders. We're playing probabilities. Trading is a game of variance. You're going to win, you're going to lose. If you have an edge in these markets, you're going to win more than you're going to lose, and you're going to be profitable at the end of the month. So it's important that you try to take most of these high probability setups. So here's the London low sweep, right? We sweep that London low. That's a major sweep of liquidity. Now we're looking for good reactions and momentum off of this level. This is perfect reactions and momentum because you could see at the bottom here, we don't close below the level. The candle never closes below this red line. We wick it, which is very, very good. That's showing me that price is respecting this level. And then we start to show some really solid bullish order flow here. You see the size and the volume of these green candles. So I am much more confident that this trade is going to work than the previous one. And as you can see, very, very nice all the way to the top of that range there. This is a much better setup. Again, here is another example of that I was just talking about. So now we have the New York AM low sweep. Again, the New York AM session from 9:30 to 11 a.m. That's going to have the most volume, the most liquidity. So when we put in those lows, the high of the New York session and the low of the New York session, that's going to have a ton of liquidity there you can use for those sweeps. So we swept that low right there. I then waited for the reversal. I found a low time frame IFEG setup that I liked. Typically, I'm looking for anywhere from like 10 to 20 points in size when we talk about these fair value gaps. Now, I can increase that or decrease that a little bit just depending on how volatile the market is at a certain point. But in general, I would say 10 to 20 points is kind of what you're looking for. I entered long when price inversed the gap, and then we just went right to all the TPs. This is a beautiful trade. Absolutely beautiful trade once again. All right, guys, here is another example. Now, this trade does not have a major liquidity sweep, which does mean it's lower probability because the liquidity sweep for me is the #1 confluence that I've found in trading, and I've been doing this for 4 years now. But from time to time, I'll still take setups that have a ton of confluences, but they might not have the sweep. So in this example right here, we are delivering from a 1 hour fair value gap. This is another concept I like to use a lot. You want to pair the high time frame narrative with the low time frame narrative. So if we're going into an hourly fair value gap on the hourly, right, that means you're expecting price to reject that hourly gap, right? Because that's just how ICT works, the imbalances. We hit an imbalance, reject off of it, and seek something else, right? So now if we're tapping an hourly gap and you're expecting price to reject, you can kind of complement that by dropping down to the 1 minute, the 2 minute, the 3 minute, looking for a low time frame setup to complement that bearish narrative and look for a short. And that's exactly what I did here. We tapped the 1 hour. I looked for a 2 minute IFEG. I entered short when we inversed, and then I just rode that thing all the way down. And you can see I even called this out in my private group. And guys, if you do want to join my private group, I live trade every single morning with my members 5 days a week, every single trading day. And you can claim a 7-day free trial. Link is in the description. All right, guys, this next setup, it's labeling, it's almost approaching A+ territory, because now we're using both concepts at the same time that I just spoke about. Not only are we sweeping 4-hour sell side liquidity, we are also tapping a 1 hour fair value gap. This is so important. Like, we have two major confluences right now that are telling us that, wow, this is a really good area where price may reverse. So what do? I look for a decently sized 1 minute IFEG. I wait for that IFEG to inverse, and then I go long, and it's just beautiful. It's a really easy win. I called it out. You could see my executions right here on my accounts, my funded accounts. And you're not going to get this every time, because sometimes you'll just get a liquidity sweep. Sometimes you'll just get a fair value gap tap, as you've seen in the previous examples. But when you actually get both at the same time and they're synchronizing with each other, these are the highest quality setups. These are the A+ setups. You should be risking the most money on these trades. Guys, I mean, I really can just show you these trades all day, every day, but you get the idea. Once again, we come up, we sweep London high. I'm looking for a short off of this level. We look at, I believe this was like the 2 minute, and then we just wait for it to inverse bearish, and we enter short, and we just take our profits. Like, and just on this little trade alone, I made $10,528. Like, trading does not need to be complicated, guys. Hopefully by now you get the idea and the gist of my model. Trading does not need to be complicated. Before I found this strategy and this model, I was trading so many different things. I was trading head and shoulders, EMAs, order flow, pattern trading, and it was so subjective, so confusing, that I felt blessed when I actually found this model, because you have a checklist. You have, if this happens, I do this. If this happens, I do this. If nothing happens, I do nothing. I sit on my hands and I wait. And although it's boring, it may seem boring, and it may seem like I'm just doing the same thing every single day. That's how I want my trading to be. I want to treat it as a business. I want to go in like a mechanical robot, apply my edge, and print money out of thin air from the markets. And that's how I've been able to take 6 figures in payouts last year, and I've already taken 6 figures in payouts this year. So hopefully you guys enjoyed. If you have any questions, like I said, leave a comment down below, and I'll see you on the next one.